Let's move outside of continental Europe, across the Channel to the UK, and maybe even at the same time across the Atlantic to the US.
Oh, are we on a world tour here?
Well, the main spots.
Okay.
Yeah, what about the debt in those countries? Are those attractive safe havens or alternatives to the euro?
Well, the
UK is still AAA. The US has lost its AAA rating.
Well, the UK is not AAA. I mean, it's still rated AAA, but it's not AAA. You see that the UK doesn't have its house in order, but they do have their sovereignty. They have control over their own currency, and therefore they can hold out longer than Italy can, for instance, or Spain or so. So it will drag on, but from a certain point onwards, I mean, they are trying something that will not work. It is the right idea, but at the wrong time. You cannot go into fiscal austerity without virtually killing the patient. At the present time, with such an extended debt situation in our system, going into fiscal consolidation and cutting government spending pushes the economy down into a deflationary situation, and that will eventually increase government debt dramatically, because at the end of this spiraling down, the government has to rescue it time after time, and when it's bad enough, they forget about fiscal austerity and they will give a fiscal push again. Monetary policy doesn't work. They are trying that, but in an over-indebted situation, an economy does not work with monetary push.
But isn't that the key, that there is so much debt, that more debt is not going to solve the problem, whether you're looking at Europe, UK, or even the United States?
It's a practice in procrastination.
Yeah, so it's basically the line of least resistance to try to keep things going without really facing reality of the problem?
That's right.
It's sort of bleak, isn't it, then?
Well, it's, I cannot tell you the time when things will unravel, but obviously this will not lead to a solution. It will lead to more problems.
Rather than facing the fact that they're on the wrong road and it's difficult politically to turn around and go the right direction.
Yeah, it's politically suicidal.
In this kind of environment, and I know from your roundtable discussions at Barron's, you've been basically suggesting that people hold some gold in their portfolio?
Definitely. I do believe that even though monetary policy doesn't work, monetary policy can finance government budgets. And you will see more and more of that, and at an increasing time, which is a deflationary policy. Right now we are in such a deflationary process that it doesn't show up yet as new inflation in terms of CPI, but if continued, it will at some point of time. And basically we are in a process of debasing our currencies and think we can grow out of the problem, which won't work. And we have negative real interest rates in virtually all the major currencies, and when you have that situation, the currencies all decline against the value of gold. So expressed in gold, we are now in the second big decline of paper currencies versus gold. The first decline was in the 70s. Then we had a period in the 80s into the 90s of high real interest rates. You had a stable currency situation. Now we are in the second decline, and I think that we'll have another couple of years to run.
Yeah, well, at least a couple of years, in the sense that I know Mr. Bernanke is saying that interest rates are going to stay low until 2013, and the inflation rate in the U.S. is picking up. I think the inflation rate here in Europe now is running over 3%, if I'm not mistaken, and in the Eurozone. UK, the inflation rate, their target is 2%, and they've been running, I think, 3.5%. So inflation is picking up in some of these locations, and you do have negative interest rates.
Yes, that is true. However, we have now a global economic slowdown, and I think that means we will have more slack capacity opening up in the world economy. So prices of some of the products that consumers buy will go down, and therefore I think for cyclical reasons inflation rate will decline over the next, let's say, 18 months. Then it will be important to see how far that rate declines and at what time the political decision makers come in and create new stimulus. Right now, fiscal stimulus is out, I know that. I think at the end of the day, and I expect that towards the later part of next year, probably in 12 months' time, they will come out with a new fiscal stimulus package because the system will be at the brink of collapse again.
Mm-hmm. Another round of quantitative easing.
Well, you know, Einstein once said, if you do the same thing again and again and you expect a different outcome, that's the explanation of being dumb.
Yeah.
And it doesn't work, but they will do it again because they have not learned anything else.
But that's
Bernanke is just printing money because that's what he have learned, and he's applying his model and his theory on the current situation, although it's a pretty different situation in the 1930s.
Yeah, of course. First of all, you didn't have the level of debt that
we didn't have the same level of debt, and we had a gold standard.
Exactly. So to caused the money supply to contract as people moved from paper into tangible assets. But you know, that's the theory. The theory today is money printing to solve all problems, even when it doesn't solve the problems.
No, it won't. But we are not at the point where they admit it, and they will try again and again.
Will they ever?
I cannot tell you how often they will try. You know, at some point the market will force them into some other painful decisions, and I cannot tell you what it will be. I mean, the banking system could collapse, currencies could collapse. You will have more government controls everywhere, and pretty dirigist economic situation all of a sudden.
Yeah.